In the first episode, we heard the chairman of the Empowered Committee, the Union Finance Minister, Mr. Arun Jaitley, and our experts on various aspects of the goods and services tax. I would request Mr. Sapra to throw some light on this, that what are the highlights of the bill, and particularly the complex part of it, which is going to be a big challenge for the not only for the states and the center, but also for the SECs and taxpayers in the country.
So the first question is, why do we need a constitutional amendment bill? And what we have to realize is that today the center has certain powers to levy taxes, and the state has certain powers to levy taxes. So while center can levy taxes on manufacture, on services, it cannot levy taxes on supply of goods within the state. Those are the powers of the state. Similarly, states cannot levy taxes on services. There are certain other issues which were there, because of which the constitution needed to be amended to allow center and states to have these powers. That has been the reason why the constitutional amendment bill has been introduced. The reason why it has been debated over a long period is that there were certain contentious issues regarding the base of the taxes, what taxes needed to be subsumed. So while from an ideal GST perspective, all taxes which are there today, which are being levied by center, state, municipalities, should get subsumed, and we should only have a CGST and an SGST. That is not going to obviously happen.
Okay.
Second thing also is that ideally all the base should be wide enough to cover all commodities. That would allow for the flawless credit mechanism and no cascading, which is the basic purpose why GST is being introduced in this country. Today credits are being stopped because services, whatever tax is being paid on services, credit cannot be taken by the dealers. Similarly, whatever VAT is being paid, that credit is not available to the service provider. So huge cascading. That needs to be rectified. That can only happen if everything is into the in the domain of the GST. The couple of products which were being debated was petroleum, then alcohol, electricity, whether taxes on these commodities should be within the GST or not. And the debate was that petroleum was one of the most contended points, whether taxes paid on petroleum, the credit should be allowed on that. What the people have to realize that there are a lot of taxes which are going into the manufacture and supply of petroleum products. And these petroleum products in turn go into all sectors. Until these are really creditable, the credit mechanism is failing. The impact is that the revenue neutral rate which the country is proposing is going to go up.
Right.
So that is the reason why petroleum, everybody wanted the petroleum into the GST scenario, but the states have opposed that. What has happened now is that in the constitutional amendment, all goods and services have been taxed. Petroleum is into the GST, while it will be continue to be, there will be no tax on that. We can call it as an exempted product. But the states and the center would have powers to levy tax on the supply.
So is the industry really disheartened when it was decided that petroleum is going to be outside the GST net?
Yeah, I would put it like this. There's one portion of integration that is missing. Without power, can you manufacture any goods? Yeah. So if without power, and to generate power, you need fuel. Right. And if fuel is not going to be there, and the generators that you run is not going to be eligible for credit, and generators don't light up the factory, right. It goes into goods and services. So that is a major miss, I would say so.
So apart from that, sir, any other aspect, any other feature in the bill which you find that which is really noticeable and which is going to be a serious distortion to the architecture which was debated and discussed earlier, and in a very short span of time, if we go back to December 11, which turns out to be the red letter day so far as GST is concerned, because a lot of positive developments started building up from December 11. So, sir, if you look at that, any other distortion, any other very critical thing which you find in the bill, sir?
Let me first clearly say that the distortion is not very major. But there are distortions. But you must remember one thing. After this 45-day budget by Mr. Arun Jaitley, and I really admire the finance minister for that. In 45 days, he devoted 2 paragraphs on GST. On that, he had said that there are issues with the states. I have discussed with the states both individually and collectively, mind you, individually as well. So it showed that his seriousness to get the GST in. Now, keeping that in mind, you have to have certain compromise because you must have states on board. Because GST is basically like a, they will know better, that is like a joint venture. And in a joint venture, you can't have a partner who is aggrieved. So you have to take the partner on board, and for that, whatever possible he has done. And that is what he has done. You see that if you look at the Constitution Bill, first compromise is, of course, that petroleum is in but out. It is in through the Constitution, but the major in. Why? If petroleum was not put in the bill, inside the ambit of GST, you would have needed another amendment to when you decide
Constitution amendments,
which will happen in case of alcohol.
Right.
If you see the definition of GST, GST is any tax on supply of goods or services or both, except on alcohol for human consumption.
Right.
That means alcohol is constitutionally out. Now, here petroleum is inside GST, but there is a clause again in the bill, and some clause is there where it says the GST rate on alcohol will be decided by the GST Council at a subsequent date. Now, again, here he has passed on this the authority to the GST Council to decide when the GST, the petroleum will be in.
So do you visualize that the GST Council is going to be that all-empowered body which is going to decide even the revenue neutral rate, exemption threshold, all the critical issues?
Absolutely. GST Council will, and there is no harm in it. Because if you have seen what Mr. Jaitley's, the bite that was given there, he had made it very clear that the voting pattern would be such that all the states taken together alone, or the center alone cannot push.
They cannot prevail over
so
each
whatever
other.
they decide, it will have a sort of the majority of the states and the center. So they will decide, and then they will bring in petroleum. Now the question is the other one. The other question, this alcohol, I'm not very happy about it because it should have been given the same treatment as the center has agreed to give to tobacco.
Can I make a point here? So you raised the point of the GST Council. Now, the whatever decisions are taken, it's a 3/4 majority which is required, with the center having 1/3 voting rights and the remaining 2/3 with the states. So it's quite democratic in terms of that they are wanting all the states and the center to be on board for any decision. But these decisions are not binding on either the center or the state. They are advisory in nature.
I tell you, there's what I feel is that, you see, a council cannot have a dictatorial role towards the parliament and the legislative assembly because they can only be recommendatory in nature. If you see all the commissions, finance commission, that commission, this commission, they're all recommendatory because ultimately parliament is supreme, state legislatures are supreme. But I would expect that having come through the GST Council, which had the representatives of the in the finance domain, the chief of finance, and the finance domain of the center, all the chiefs, this will carry a weight which will make Parliament accepting the recommendation.
But tomorrow, if a state decides to levy a tax which is outside the purview, outside the purview of what the GST Council has said, it would technically not be unconstitutional.
Would that not be, Mr. Shailendra, subject to the fact that the entry still exists? The Constitution Amendment Bill today provides, I think Bipin correctly started it, that there are certain entries that are getting removed. For example, entry 54, the power of VAT is getting removed. Now the question is, even if they have to go in for residual taxation, as Bipin correctly suspects, that it would happen in case there are revenue needs. The larger issue is they must have taxing powers left in the amended constitution for it to come in. That's the first condition. And second is, if you look at the way that, if you start with the way that what are the distortions today, I would still feel more than more than the distortions, I would still feel there is one particular point that Mr. Majumdar didn't touch upon. I would still say that they have provided band rates, and there is another clause on national hazards, or state-wise if there are hazards like natural disasters. There's a specific clause inside the Constitutional Amendment Bill. The question is, now let's say there is a small disaster in a state. God forbid nothing should happen, but if something happens and there is floods in a particular state, now there is a special element of tax that comes in with the complete recommendation of the GST Council. I feel there should be a larger question of restraint also, how many years you should carry this forward. For example, we run surcharges and cesses in our country like ever.
So there is a need for
So
a cap.
absolutely, that cap is not there. In our opinion, in the industry's opinion, that is a distortion.
But I would respond to what Bipin had said, that some state deciding something else. That will not be possible, because without GST Council's approval, he cannot do anything. And that's why, let me go back. In the 115th Constitution Amendment Bill, which was placed before the Parliament, previous Parliament, and in 2011, a proposal was there to have a dispute settlement authority. And this is not technical dispute. This is a dispute amongst the states and dispute between the center and the states. Yes. So now that the states, again, on the ground of fiscal autonomy and all, they say that it should not be there. Yes. But if you see that that power has now been vested with the GST Council. There's a separate clause. Right. So that will take care of the eventuality if certain states suddenly decides to have something else. Right. Coming to back to the distortion, other major distortion that has perhaps happened but then there was, as I said, Finance Minister showed his determination and urgency to have this bill done. Because as you are aware, Prime Minister has set a date after having a briefing from the Finance Ministry, and that date is 1st April 2016. Right. Now, it was very necessary to introduce the bill in the winter session and hopefully to get it passed in the budget session in February, March, April. So that, again, a compromise has been made. Now it is with regard to the manufacturing states can collect a 1% levy additional to the IGST rate. Right. And that means it becomes a origin-based tax. Now, here one very important point which is being missed out. That one of the underlying principles of destination-based GST is that in it, what we call it, that the equity factor. The equity factor is embedded in the destination-based tax. Now, from a highly industrialist state, I'll not name, and if the goods are going to a much less industrialized state, then by virtue of the structure of destination-based IGST, the tax collected on that goes to that state. Right. Now, that obviously gives some more money, extra money to that recipient state. Right. And that will go into the investment and try to develop. So you will have a level, this is a very fantastic thing. And I think this has not been
so
put in
that. So you're saying,
sir,
the state with a lot of population
will gain more.
They will gain more.
They'll gain more in the IGST. So other thing, this 1% for 2 years, Finance Minister, we just saw that he has explained also to that extent that he has done it. I think it is all the fear of unknown so far as the states are concerned. There is so much of revenue buoyancy, which Revenue Secretary Mr. Shaktikanta Das has also mentioned. Of course, Finance Minister has also mentioned with the bite that you showed. I don't think there is so much of fear, because you see the manufacturing states would be losing only little part of that. Their goods are going to the destination-based states, but they're gaining a share in the service tax, which is not there now. They're gaining a share from the central excise tax, which is not there now. So I feel within 1 year itself, the states will realize their revenue is not jeopardized. In fact, you see, if you see the history of VAT, that time also that fear was said, was voiced. But then ultimately, all the states are having much higher VAT than higher revenue than what they had in the sales tax regime. So I feel that this will iron it out, and that's why Mr. Jaitley has very intelligently, he has not made too much bones about it. He said, okay, come, to bring you on board, you want, I'm giving you up to this.
But there is, from a distortion point of view, we need to look at it. Right. See, the distortion point of view is from an industry. The situation is like this. if you assume that this 1% tax is going to replace a CST. Right. Now, the larger issue in the bill is it only links it to supply of goods between states. Right. Now, therefore, there are situations when an industry is set up in India which has got trading operations within various states. Right. It looks like from the wording of the bill and the word supply that when there is stock transfer between two branches of one single entity, there could be a mischief tax. I mean, it was not the intention, it was by mischief of the drafting. Now, the larger issue should be addressed. You look at it from the credit perspective. Even today, a CST transaction is not vatable in a state. We agree. But then it's only when there is a transfer of goods and there is a movement of the goods occurring from one state to another state in the course of sale. That's the CST. Now, if you attract this 1% tax to supply, then you are creating something, a situation. I was not paying until 1/4/2016, which I had to pay for 2 years beyond 1/4/2016 to 18, and it is not vatable. So it's a cost to the P&L.
So my view would be that I don't think the intention of the government is to do that, and we would need to read the fine print of the constitutional bill and maybe see how the law is actually brought in the fore. Stock transfer is a very different commodity. Today, the stock transfer is not taxed. You are allowed to move from one place to another the goods within the entity without paying any taxes. Tomorrow, the need would be because of the need to transfer credits from one state to another when the goods move from one state to another, and because the definition so provides. But from a stock transfer perspective, whether there can be a levy of 1% which is not vatable and a cost for just stock transfer, the intention does not appear to be so. And even if the constitutional bill can be interpreted to read the way you are saying, I think there would be some law at some point of time to really take care of this.
An exemption will take care of that. Perhaps exemption,
my view would be that
or making it nil levy.
There should not be a tax on this.
Stock transfer.
The bigger question now here is, and this is throwing up so many questions, the industry does not actually have a forum to go to, a forum between common to both center and state, where the industry can put forward its views on all these issues. It's time that a lot of these issues are put on in the public domain for the discussion. I think once the industry is made a party to creating the law, we would have a much better GST, given that the industry knows its concerns and is willing to share with the lawmakers in every form.
So what you're suggesting is there should be a common post office where the industries and maybe even a states or a common man in general, they can send their suggestions at one place, and that post office should be looked after by a team of central government officials and the state government officials.
May I say something more on this?
Sure.
Maybe the meetings of the empowered committee, once the constitutional amendment bill is passed and it becomes a GST council, it will be notified. There should be two sets of meetings. One, the government meetings, one is the interaction meetings. They should run parallel. Yes. And the interaction meetings inputs should then be subsequently considered by the internal meetings. That would be the right way forward.
I agree with both of them, but I just want to add one more. Till the time this structured thing comes, at least one thing which the Central Board of Excise and Customs or the Revenue Headquarters or from the State Government's Empowered Committee, one thing should be done immediately. Whatever documents are finalized or about to be finalized, I won't say finalized, about to be finalized, like your place of supply of goods and services rules, which is very critical. So this cannot be decided only with, I myself had been a government servant, but I am telling you, it cannot be decided only by the government servant. Yeah. It has to be the trade and industry who only know where the shoe pinches, they should be made a party to it. So my submission would be that waiting for that structure to come, as is rightly said, the two-tier structures for having interaction, put everything on the public domain, starting with the place of supply rules that has already been accepted by the EC. And now the constitution bill is also in the public domain. So why shy away from that? And then you give enough time to the trade and industry to give their comments, and accordingly you modify that bill. Otherwise, I tell you, particularly it's not so much the supply of goods, but supply of services rules will be so critical in the today's age of, say, e-commerce. and everything will have to be clarified. And that's why it is very essential. The sooner the government puts that in the public domain, and any other matter on where they have finalized, for example, the refund procedure or the registration and everything should be put on the public domain as early as possible.
So to just stress what you have started on the point, place of supply. The whole construct of GST is, at least for services and even for goods, and there's a lot of debate going on, and there are a lot of unanswered questions, is based on the place of supply.
Yes.
The fact that a state, so in case of services, when the supplies are being received in a particular state, and the type of tax which is being paid would be determined by the place of supply. So if an entity is receiving services at a location, say in Rajasthan, and there's an output tax in Haryana, how credits would be transferred there? So there would be a lot of cascading which is being visualized, which needs to be really taken care of by these place of supply rules. And those situations can only be brought forward once these are in the public domain.
Absolutely.
The second thing is what you started off is the compliance. The whole industry is really looking at the lawmakers to come up with a compliance mechanism which is very friendly to the taxpayers, because the entire thing of the success of this is dependent on what compliance is set up, whether there is one registration, whether there is one return, how many agencies would be empowered to audit, what would be the anti-evasion mechanism. All those are essentials. But multiplicity of these is what the industry is really concerned about. And the whole success of GST would depend upon how these are.
I have a few more points to continue.
And Mr. Sridhar, if you don't mind, I would like to take you to the departmental views which we have available with us. Mr. Upendra Gupta, who is sharing the official perspective on some of the technical issues and the compliance issues which were raised by Mr. Sapra and Mr. Sridhar. One is that 1% additional duty on interstate trade. Whether, as you rightly said, whether it is a case of oversight or it's a poor drafting, whether the credit will be available or not. Let us hear Mr. Upendra Gupta what he has to say on this issue.